Oliver Sloup is with Blue Line Futures, and we don't see him with the toboggan on and the big gloves, so it can't be too cold yet. But Oliver, what are you watching here in the markets?
Well, I promise you it is cold out there, that's for sure. Pretty frigid wind chill. But the grain's heating up a little bit to start the week. We've got some green on the screen, which is always nice to see, especially with how we ended last week's trade, which was a little bit on the softer side in the grain markets. We saw kind of a choppy trade overnight, but all in all, things are holding well. Looking at that December corn contract, we've started to develop a little bit of a trading range, about 10, 12 cents. And right now we're back towards the lower end of that. There's pretty good support, 426.5. That's the 20-day moving average. Just below that, 423.5. That's a 50-day moving average. I think that those little support pockets will hold, and we can continue to stair step over time. Upside resistance that we're keeping an eye on, 436 to 437. So until we get a breakout either below or above those levels, I think could be a trader's paradise here in the near term. Now, we do have a WASD report at the end of the week, and then obviously a lot of attention shifting towards South America as well, where they're expected, or I guess estimated to be about 72% planted with that corn crop. So weather going to take center stage in South America.
Hey, I'm glad you went there, Oliver, because we're now looking at the 25 versus 26 December contracts. And could what happens in Brazil as far as planting intentions, actual plantings, and then the crop, could that affect what we do here in the U.S. come this spring?
I think it very well could. And, you know, one of the things we've been talking about with clients over the last several weeks is really just not a whole lot of weather premium in South America. Their corn planting is right on pace, but soybeans is a little bit behind where they were last year due to some irregular rainfall. So if we do start to get some weather hiccups in South America, potentially that adds some premium into prices and can influence what we end up planting here in the States for next year's crop. But right now, again, it's just what is Brazil and South America as a whole going to be able to produce, and how is that crop going to continue to develop with the ever-changing weather patterns down there? The soybean market, you know, it looks really, really constructive. Obviously, we had the big run higher, got into overbought territory, and on the daily chart, you think we probably went a little too far too fast. But if you zoom out and look at the weekly chart, it looks like a pretty clean breakout, and really kind of emphasizes the fact that we really haven't done anything in the soybean market all year long. It's been a relatively quiet market. So a breakout above that $10.80 to $11 level in the January beans, I think, will offer pretty good support going forward and keeps the door open for a lot of upside potential.
All right, Oliver, let's move from our row crops over to our livestock futures. And before we do that, we'll take a break. Be back in a moment with more Market Day Report. Find out live cattle moving higher, up 245, December 223.87, nearly $3 higher on the February contract last check. Then feeders, we've been higher across the board, up $7.12 on that expiring November. And January, $5.92 higher, $325.65. Keeping a real close eye, though, on the hogs. See if they can settle higher. They've been lower for 2 straight sessions and have just been rolling down that hill. As if it were king of the hill, well, somebody pushed them, and they've got dirt in their mouth, and they're rolling, rolling, rolling. That never happened to Oliver Sloup, Blue Line Futures. I bet you were always the king of the hill, weren't you?
I don't know. That's debatable for sure. But yeah, lean hogs just continue to drift lower front month December, trying to gain some ground, getting back above the 200-day moving average for the first time in about a week, which is constructive. But you really want to see consecutive closes back above some of those indicators. And you want to see the deferred months participate in the relief rally. And we aren't really seeing that yet. So not an all clear sign just yet. I would like to think that lean hogs can get some sort of relief rally here in the near future, though, as they are about as oversold as they've been in all year long. So potentially some opportunity once the dust settles there. On the cattle front, volatility continues to be the name of the game. We've seen the CME CVOL index, which is basically a volatility measure, at multi-year highs for live cattle and feeder cattle. And you could probably guess that without looking at that indicator, just by the daily ranges that we've seen. Feeder cattle, the average daily range over the last 14 days has been about $9. And for live cattle, that's closer to about $4.50. So big ranges. A lot of headlines flying back and forth, a lot of money exchanging hands. Nice to see some green to start this week's trade. Hopefully we can get some additional relief and consolidation, maybe normalize a little bit more of a trading range going forward.
Okay, last one here for you is one that's been tied back over to the cattle market. We've been watching pretty closely the metals and the gold market. We're seeing gold try to go higher for the fourth straight session. Final thoughts?
Yeah, silver getting out above $50 again. Gold tacking on about $100. The government potentially reopening and potential some checks. I guess $2,000 potentially to everybody. It's certainly a risk-on trade in a lot of these outside markets, and the precious metals capitalizing on that to start the week.
Yeah, even copper moving higher, and here's platinum to wrap up our look at the metals. Oliver Sloup, he's the gold medal winner today. Blue Line Futures, great to see you.